Welcome to Agency Exposed. We are missing somebody today.
Hey Ken, it's kind of quiet over here. What's going on?
Yeah. Not a lot of chatter in the Bob section of the room today.
The wisdom is gone today.
It's actually true. Bob is out. He's doing a TED Talk.
Yes. So if you guys are in the area of Franklin, Bob is doing, I think, a 12-minute talk.
Yeah.
Approximately. So he's working on that today and getting all that. It's a lot of work, obviously. So wish him well.
He's the smartest one out of the group, I guess.
Yes. I don't get invited to those things.
Yeah. And his talk, the name of his talk is, do you know it? It's so, I have to read it three times to understand it.
You know, Bob has an interesting experience in
That's
business
a compliment,
and things.
by the way.
Yeah. And so I think I think it's going to be a good one because I think his wisdom and experience, I think, has allowed him to be who he is. I think he's, very empathetic. And I think it's about, correct me if I'm wrong, Bob, you're going to probably listen to this and go, you guys got it all wrong.
I'm trying to find
But it's about grief in business and loss. Those are things that are, I think every business person deals with. I mean, you do feel within business at times a strong loss.
It's the title of his talk is From Ambiguous Loss to Tragic Optimism.
Yes.
Journeying together through collective grief.
Yes.
I think he's too smart for me. I don't know what to do with that.
Well, I think it's business and personal mixed
Bob's,
together.
Bob's
business is personal. I mean, you put your life into something, and sometimes you put your hopes and your dreams into something, and let's face it, they doesn't always work out. And
we put our identity into our business often.
Correct, and
what we do.
Yeah,
and then when that goes away,
what do you do?
Yeah, what do you do? And Bob's had you can tell his own story, but that's part of his story. And I know that was a challenging time, and there's a lot you can learn from it.
Yeah, I think that our next podcast, we should probably have him.
We should have him do his talk and break it down.
Yeah, bring us unpack it a little further, I think. So we'll do that next time. This week, man, there's a lot going on in the world. And I think today, Ken, let's unpack a few things, specifically in the realm of...
Well, since I texted you yesterday because I was like, Bob's not going to be able to be here. And I got Brad. And Brad is...
Jeez.
Okay, so before we have to say, the disclaimer of this episode is this is not investment advice. This is not business advice. This is our opinion. But Brad is a really, I think, very talented amateur investor. Amateur, maybe not even, right? He does it professionally for himself and his business. And I've always been in that scene too, but I've learned so much from you, and you've got your own. And so, and you're in, before crypto was hot and all that kind of stuff, into crypto and blockchain investing, and also, all the stocks, equities, everything.
Yeah.
And so when it comes to how do you multiply your money in different markets, Brad is one of the guys I go to. And you're in real estate. You're in a lot of different things.
A few things.
Yeah. And so that is not it's not, I'm not calling out your resume. I'm saying, so I texted you. I was like, hey, since Bob's not going to be here, why don't we do it's sort of an investing focused episode. Every business owner, every person should be an investor of some kind. We're in a really interesting climate, or interesting is the wrong word. It's a challenging climate right now. Inflation is at record highs since, I think, going back to 1982, I want to say.
Yeah.
We all know that, right? The market is now into correction bear territory, and I would like to know from Brad, I want to know what you think about that. Bitcoin and is sort of, it's sort of going sideways at the moment, right? It's just sort of up and down in the 37 to 41 range.
41,000, yeah.
And then we've got all the Russian-Ukraine stuff that's happening. We've got the Fed raising interest rates, and all these different things contributing to how do you make the most of the money that you have. and what are you doing these days?
Yeah.
So I don't know. Maybe we can just dig into all that stuff. And
Yeah,
what do you think?
yeah, thanks. That was an interesting intro. Again, this is not financial advice. I'm not an expert, but I just play one on TV.
You do have a YouTube channel.
I
about
do
it.
have a YouTube channel for crypto, just something I'm doing for fun. But it started when I was a teen. My dad was he was interested in investments. He did a lot of different things, investments, a lot of stocks. And that was, back in the day before the internet, where you get the Wall Street Journal or some other newspaper, and you see how your stocks closed the day before, and you had to call your broker to sell anything. So it wasn't real time, and ETFs weren't around. It wasn't real time trading for free almost, on these platforms. And so my dad used to even deal in diamonds. He used to, during the diamond in the 80s, when diamonds, the values was really high, he would buy diamonds and sell them to brokers in New York and make some money that way and other things. So I was born in a household with that kind of mindset. In my teens, my brother and I started buying some penny stock using CompuServe. If you're familiar with it's an old school, we had a really intro modem that we'd log on to CompuServe. It's a platform that was even before AOL, and you could actually buy and sell. So you'd send the money to them in a check, a broker, and then you have to type in
what brokerage account was it?
I can't even remember. It was like a New York one that you had to type in certain codes to buy and sell, and we'd buy some. It wasn't much, just to play with, and probably didn't make any money, but it taught me a little bit, and it just got my feet wet. The thing with me is that I'm not a smart man, but so I have to actually do to learn. So I have to have skin in the game. Otherwise, I just don't know how to participate. I can't participate just off the sidelines. Otherwise, I just don't learn.
Did you learn well in school?
I wasn't great at school.
Because it's all theory, right? Like at the time.
Yeah, I was average. I could have been better if I would have tried, but there's other things that interest me. As a teen, I was very active in the stuff. I wanted to use my hands. I wanted to engage. I have to be in the play. And so a lot of my investment knowledge comes from actual just trying things and learning. So during the first internet boom in the late 1990s, early 2000s, I was invested in a lot of companies and I lost a lot of money. At time, not a lot, but for me at the time when I was in my young 20s, it was up and down.
Let me ask you. So you were going through investing at that era, and I wasn't. Yes. But I remember.
I bought Amazon at probably $1 or whatever. Right. Not $1, but whatever. I can't even remember. I have to go back and look at my history.
If only you held it.
Exactly.
So when that boom happened, did some of that feel like some things now at all to you?
Does it feel like now?
So with some of the excitement around the crypto crazes, there are undoubtedly some bubbles right now.
Yes, I would have to say that the stock market in 2000, where you're investing in the internet stocks, people were putting money down if you had a nice logo and a name and some type of direction. It didn't matter if you made money or how well funded you were.
Sounds like if you're in blockchain or NFTs
correct.
Right now, it's exactly the same thing.
Yes, it's very similar to the crypto world for sure. The difference I think with the crypto world is that you have a little bit more technical analysis around it. There's data that exists in difference, and so they're different animals. Like the market, the traditional equity market is all around, earnings and a lot around earnings, and so the earnings in the financial side of the business is obviously drives the business. Drives the stock and the futures of what they're doing and the P&E. You might have a stock like Tesla that has a really high PE, but the hope is the future for them. So
Right.
people are investing in the future for them. Same thing with companies like Rivian or other types of electric companies, car companies.
Where they have these just crazy P ratios, which is price
yeah,
to price to
because
earnings.
they're not making any money right now. They're just spending money, and even Amazon, had been in that stage, and it still is in that stage at some level. They but with crypto, you have it's a different model. You're not obviously crypto isn't making a lot of income right now. Some companies will. Bitcoin won't, because Bitcoin's a different animal. It's it's really a hedge, and it's really because of the scarcity of the asset that is why it's valuable, and it becomes more and more scarce. So you have to really attribute that to something like gold or silver or some type of precious metal, that there's a finite supply of it, that and so over time that asset should go up, as long as there's not a strong too many regulations, especially in the United States, where it would be deemed as something that's illegal to own.
Oh, yeah, exactly. I mean, so it often gets associated with gold, as far as like the idea of a store of value that
With Bitcoin, it does.
Bitcoin does,
Yeah.
right?
And actually, Ethereum at some level has kind of moved that way as well, because of the deflationary feature that they've added to the
Right.
cryptocurrency of burning Ethereum to make it deflationary. So it becomes more and more rare.
So so maybe we walk through a few of these kind of asset classes.
Okay. I'm not an expert at all asset classes, but I'll do my.
And what I'm curious is right now, right? And so with all that's going on in the environment, in the general macroeconomic global environment. So you've got the Russian invasion in Ukraine, which is obviously really horrible and bad. We've actually discussed that on other episodes. And but as far as money is concerned in the U.S., how is that impacting what we're doing aside from gas prices? Then we also have obviously the Fed raising interest rates, because inflation is so high.
Yeah.
And so with that kind of climate, I don't know if you have any thoughts on that. You can.
Well,
what are you doing in all these different things? So from crypto to equities.
Yeah, it's a really tough time right now. I think you have to address this personally as well as for your business. So
it's all one.
It is kind of one, but you can, at the same time, depending on your business and if some of these things are affecting your business, obviously inflation is going to affect your business. It's going to affect every business. But certain businesses might get hit harder. They say the inflation rate is 7.9%, but we all know it's like 3 times that. So, for instance, we've now see gas prices are starting to change, and just so you know, does the war affect that? Yeah, a little bit, but the reality is we are already starting to climb in that area. We know that when we're buying these natural resources, we're going to pay more if we're buying them from around the world. Which is fine, and we've been there before. But the reality is there's some other areas of our life that haven't been hit yet. For instance, food has not been hit as hard as it probably will be. They say that we're eating last year's crop, and so this year we're seeing things like fertilizer go up 3 times, and so that's going to affect next year's yield, and so food prices are going to go up. So I think the average family is going to feel that a lot more in the next 6 to 8 months. Now, I read an article that said that if families who make $100,000 a year as a household income are struggling just to pay the bills right now. Like they're just breaking even. They're not saving anything.
You said $100,000?
$100,000 income a year. And I would have to say that's more than the average family makes in the United States. On average. So if you make $100K and you're struggling just to pay the bills, you have to do a couple things. And I've been doing this in my own business. I'm looking at anything that we can cut out of our budget, personally and for my business. Mm-hmm. Anything that's extra, because when you have 10 years of great years financially, we've been in. You start to acquire things,
right? Fast.
you start to acquire things. You start to, look at your services that you're like, even I'm looking at stuff even personally for my home. And I'm like, how many streaming services do I have? Do I really need Netflix? I watch maybe one show every month on it. You know what I mean? Can I cut that out? Can I cut that $12, $16 a month out? But so there's a lot of fast. So, personally,
well, there's not a lot. And on that point, I'm doing the same thing, home and business.
Yeah.
And we're also increasing prices, by the way, too. I mean, the reality is that, first of all, you often don't talk about increasing prices. I don't know how often agencies increase prices. In my experience, they don't increase prices that often.
Yes.
Right. But when inflation is probably more like 20%, your prices have to go up because eventually it's going to hit you. That trickles down, right? But also cutting things out. I find that I don't know if you would agree with this, but most people, I would say most of the population that I come into contact with who are not kind of in the investing financial space still don't realize that you hear the inflation number, everyone does, but they're not cutting much out of their life. Or I would say a lot of people's lives are still pretty fat because of the stimulus stuff that's still carried over, right? Because it's conditioned you to, I've got a lot of money, right, laying around. I've got more disposable income than I had before. So for 2 years, you're conditioned to spending more, right, and wasting money essentially, and having things that you don't need. And I think even now you can see, even in the inflation data, like retail data is not, like retail sales are not down very much. Inflation's up like crazy, and people are still spending. So
there's a lot of money in. I mean, we've printed.
We still have a lot of money.
That's what causes inflation, when there's so much money printed, but there's not enough to buy. So
if you wait until it hits your pocket to slow down, then you're already in a problem.
Yeah, and I think the challenge that I have is how much cash should I have on hand, knowing that it is getting, hit hard and it's really losing value, and how much of it should I put into storage, into something that at least hedges inflation.
And that's what I want to ask you.
I won't have access to it, and I might not have access to it at a gain for 2 or 3 or 4 or 5 years from now.
So I've been having this debate with myself about how much.
How
was
that conversation, by the way?
I always win.
Okay, that's good.
So how much cash should you hold versus how much? Because there aren't many. Everything's kind of retracting right now.
Yes,
in a lot of ways, even real estate, right? And so, the stock market was on a tear, and we all knew that was kind of bubble-esque, at least in my opinion. It was. I don't know what you think about that. It was at record highs, when obviously.
And we've had a good 10-year run, I'm telling you.
We've had a good 10-year run, even record highs on that run, right? Like exponential highs on that run in the last 2 years. And so we knew that was going to come to an end, but like that was there. And so you could put your money there and be making 10, 20, 30%, in a year for the last couple of years, I would say, in certain places. Now that's not the case, right? And so with your business or yourself, like if you have cash, what do you do? How much do you hold? Where do you put certain things? If you're on like a 20-year time horizon, which a lot of, I don't know how, depending on what stage you're in, you might be. The stock market still might be fine, but it's not like it hasn't bottomed out, and so you probably want to wait, on that. But I don't know. What are your thoughts on that? Like, what do you hold in cash? What are you holding in cash? You don't have to tell us the money number, but like, what's your philosophy on that? We know it's $1 billion, but like,
just so you know, I'm a student right now too, though, because this is new for me. Like what's going on right now in the markets is unique for me, because I wasn't investing in the early 80s when we held, you know what I mean? I was a kid. I was 12 years old.
Well, not just you. I mean, so you don't feel alone. I'm pretty sure I read an article by Ray Dalio, which is he's one of the world famous, hedge fund investors, right? And he said the same thing. He's like, I don't know. I've never seen this before.
Yeah. So, I mean, if you watch, it's crazy right now, because if you watch the stock market, and if you're investing, you don't know where the bottom is. I thought the bottom was going to be in a month ago. And then Russia decided to do what they did. And now everything's up in the air again. And that's the challenge right now, is that every time there's an event that happens, it makes the stock market, they don't know which direction. One day the Dow's up 500 points, the next day it's down 500 points, and it's up 500 points, and it's down 5. So we're seeing these huge swings. The market's really what they call frothy. It's just hard to understand. Like if you're a day trader, you can probably do pretty well because there's a swing about 3% every day.
Oh yeah, for sure.
Maybe 10% in a lot of the different markets. And so, even with crypto, I mean, it's just been sitting, going up and going down and going up and going down like 3 or 5, 5 to 7% and you could just buy and sell. But eventually it's going to go somewhere. And, you have to look at, like for me, I'm trying to hold the cash I have. I'm not trying to invest it. And I'm trying to look at where I need to minimize my risk. So I'm looking at companies specifically that I have invested stocks in, for instance, and trying to go, okay, is there a risk with the environment, with the world environment right now that puts this company at more risk? And should I be invested in this company right now? If something goes a little south, who's going to get hurt? And should I be careful of that? And I also look at companies like, has this stock in this company been beat up so much? Yeah, I could take another 10%, but it's so low right now, and it's such a strong company. In 5 years from now, it's a great investment to hold right now for 5 years. Warren Buffett says, buy when other people are fearful. That's when you buy. So when there's fear in the market, that's one thing that I've learned. If I take one simple strategy, is do not buy when the media is talking about a stock or a company when people are really bullish on it. Though
which has been the last 2 years.
You can, but in this environment, you have to buy when everything's wrecked, and knowing that you're holding something for a more long-term future. Now, what I'm buying today, I realize that I won't see, unless I'm buying for a quick 5% flip. I'm buying stuff that I'm going to hold until all this mess is over with in the next 2 or 3 years, 4 or 5 years. So I'm buying for my future. They're in retirement accounts. They're not like stuff I'm looking to earn income from right now and flip. However, there might be some opportunities now that you can do that but you have to really understand and watch an asset. Like you have
to be pretty experienced to do that.
Yeah, what I've done is I've watched assets for years, and so I understand their patterns. I understand how the market reacts to them. I understand. Again, I'm in the game with this because I own it, and so I understand the news. I'm reading on the news and with that specific asset. So I try to understand that, but still, you can get a little wrecked if you're not careful. And so right now, I'm just kind of like, to be honest with you, there's too much going on in the world right now.
So you're sort of sitting on the sidelines a little bit?
Yeah, and it's not about Russia. What I'm more concerned about actually is China. So Russia is one thing, and it's going to cause some havoc. And obviously what it's doing right now to the rest of the world and Europe, and obviously the Ukraine is horrific. But I'm more interested in China because it's harder for us to, sanctions and all that stuff is really difficult. So I'm hoping that that can, the heat around China can kind of dissolve. And I think that might also help the markets a little bit feel more confident. I think the longer we're in this with Russia, the market will feel more confident. The market does want to run. I'm telling you, the market wants to run a little bit more right now, but it's one day it runs, the next day it gets retract.
Yeah, you can see that because I've never seen in my entire life, where the market, it never comes down for more than a few days at a time.
Yes.
I mean, in my, again, granted, limited experience relative, like you'd see downward trends which last for weeks, and months, and sometimes years. That hasn't happened in over 10 years. Yeah, and there'll be a day that even it was a month ago, or maybe now it's even longer, but when we had some really bad days in the market where it actually crashed and went into correction territory, but then the next day it's up again, like a lot. And then it's down, and so it is trending down right now, right? We're in a would be, I think, official bear market right now.
Yeah, that's the challenge. Is everything is on the longer term is trending down.
Yeah,
and don't be afraid to get out of an asset, even if you have a loss. I mean, at some level, obviously, it depends on your strategy. If you're holding something that, like, just take for an example, Apple. If you're holding Apple and you're holding it for the next 5 years, then hold it and just don't worry about it. Don't look at it. But if you're holding it because you want to sell it in 6 months, 6 months from now, it might not be as pretty as it is right now. It might be the prettiest time right now for Apple in the next 6 months. Who knows? And so you got to understand your strategy, and you have to become where emotionally, that's the challenge, is that emotions are tied to money. And you have to become, when you're investing, you really have to have a plan, use data and your experience to make decisions, and you have to follow those decisions. Because if you react just emotionally, you're gonna make decisions that are like off the cuff, how you're feeling that day.
So let's move on to crypto.
Yes.
Again, this is all in the context of I'm a business owner, or I'm an owner of my
Yes.
my world, and I'm trying to figure out where to put my money. How am I going to beat inflation right now?
Yes.
Okay, so the stock market's probably not that right now. Equities are probably not that right now. Maybe over the next, whenever it bottoms out.
Yeah.
But I'm not putting in. Is crypto? Is there any place in crypto? And I would say now, Brad, I don't know what you like specifically. Probably Bitcoin, but are there any other coins that you're invested in that you think are stable and not stable coin stable, but like really that are smart investments?
Yeah, I do. It depends on, again, your strategy. If you're hedging inflation,
Yes,
then I would use crypto that are meant for hedge, and that would be Bitcoin. You could even say Ethereum is in that boat.
Why not the others?
The others, some of the others, not all of them, don't have the deflationary technology built into them. So they're not. Their use cases for like DeFi, deflationary finances, but they're not built the same as like scarcity.
Right.
So if you're investing in some of those, if you're looking for more of a long term, I wouldn't try to invest in the ones who have the top 10 market share as far as crypto. So those are like Cardano, other cryptocurrencies that have a strong use case.
Well, they're mostly technologies too.
They're technologies, yeah. So you're investing in the future. So it's just like, to me, those are just like investing in a future stock like Tesla or Rivian, or some even not really even Tesla. It's like investing in Rivian. They've produced a few trucks, but they're not producing at a mass level yet. But they have the capability to. They built the platform and everything, and so it's just a matter of adoption. So the challenge is that there's a lot of them. They're kind of like VHS versus beta, if you guys remember that war. Like beta was a better quality resolution, but VHS won because of adoption. So the challenge is which of these cryptos are going to be, because they are technologies, which ones are they going to be adopted for DeFi and for other types of financial.
And if you're not in the crypto space, I think that's an important distinction to understand. Yes. Is like most coins are technologies.
Correct.
They're not. I don't know what would you call them.
Bitcoin is not.
It's like a. There's an asset of.
Yes.
Right.
Bitcoin is not a technology play. It's not. It may be with like a layer 2 on top of it, but it's really more like gold. And
I think it's really confusing. Again, if you're not in this world, it gets called cryptocurrencies, but they're not currencies.
No.
Like right, they're much more like stocks.
Correct.
Of company, right? So you're investing in the technology.
Yeah.
Of Solana or something like that when you buy their coin.
Yeah, it's It's kind of an equity, but it's tradable.
It's tradable, but but as far as like it's not in asset,
Correct.
right? And so other than Bitcoin, are there even? I know there are others, but Bitcoin's sort of the only one in that class that you would consider. Is that accurate?
Well, I think there's, Ethereum has a bit of that.
But it's still a technology.
It's a technology, and it's a hedge.
It's a hedge.
Yeah, because it is now somewhat deflationary, meaning that the amount of Ethereum every time it's traded becomes more and more scarce. And so and that was designed in, and then into the protocol of Ethereum. So, for me, my makeup of crypto is probably something like, 70% Bitcoin, 20% Ethereum, and 10% what they call other altcoins or other crypto. But it is, for me, it's always like the top 10 of what is really in the next year or so gaining traction. And a lot of these cryptocurrencies back even 4 years ago that were hot, I guess you'd say.
Yeah.
Some of them have completely disappeared. They dissolved. They never got to the point where there was any adoption, and they fizzled out.
That's the risk with it.
Yeah. And so the risk is there for some of these altcoins. But I think that Bitcoin leads the way. And it's
as a hedge against inflation.
The challenge with the cryptocurrencies is that it's really been following the equities market, and it's really followed the tech sector, which is so it's been challenging because the leader being Bitcoin is not really that. It's more like gold. It hasn't really followed as a hedge, but it's interesting. The last month and a half or 2 months, it's actually been disconnected a little bit from the stock market, which is kind of what I think a lot of investors wanted to kind of see. They want to start to see as inflation hits and people are really looking to hedge and keep their money. I think we'll find that the crypto space, especially Bitcoin, will be used more as a hedge, and it will disconnect from the equity. So now when the market goes down, you might see a 3 or 4% pump. Now, if you take a chart from the US dollar versus Bitcoin, you'll see that when the dollar goes down, Bitcoin always goes up, and that's always been historical. So as our US dollar gets hit harder, historically, it should have a positive impact on the price of crypto. So we've been seeing that a little bit too. So,
what are you doing with Bitcoin right now? Are you?
I'm holding.
So it's.
I'm holding.
It's been sort of sideways ish.
Yeah, for the last
month or
month
so,
and a half,
right?
it's been going up and down. Yeah.
Around the same kind of area. Do you see it coming down?
So what I do typically during what I've been doing in this time is either most of it I've been holding, but I've been doing a little bit of dip buying and selling. So I'm not putting in a lot more assets or a lot more cash into it because I'm trying to kind of keep my cash a little bit on the sidelines for two things. I don't think we're at the bottom of things yet. I want to wait till I know this sounds really strange, and I don't wish this by any means, but I want to wait till all hell breaks loose and then buy. I want some.
When everything's wrecked and
yeah,
destroyed.
I don't know that we're at the bottom yet. So
I heard it said this way by someone. It's like you don't want to buy the dip, like that's become a cliche in the last 2 years. But you want to wait until the dip happens, and then the crash happens, and then the wreck happens. Then everyone hates the thing.
Yes,
and wants nothing to do with it.
Yes,
and then you buy.
Yes,
right.
Yeah, exactly.
Which is a waiting game.
It's a waiting game, and one of the things that I've learned to do is really what they call dollar cost average into assets. So that's not putting in all of it in at one time, putting 5% in, and then put another 5% in, and what you're doing is you're getting kind of an average price. So if it goes down, you get lucky because you buy in at a lower price. If it goes up a little bit, you don't get as good a price, but you're getting an average. And I found that really works. And you can dollar cost average out of an asset just as easy as you can dollar cost in. So right now I'm kind of doing a little bit of that, but I'm really trying to, I do a lot of technical analysis on crypto. So following Bitcoin, I pretty much know within within the next 2 or 3 days of kind of where the price action is probably going to go. I don't know long term, and it can change by the news. And it's not technical analysis; is just looking at historical data and proven data that the markets have of knowing the probability of because of support and resistance. The cool thing with crypto and Bitcoin is you have what they call on-chain and off-chain data. So you're able to see when big whale buyers are putting money on exchanges and when they're pulling it off. If they're putting money on exchanges, they're probably trying to sell. If they're taking it off, then they're holding it. So they feel very confident in holding it and taking it off and storing it off the chain, off the blockchain. I mean, off the exchanges.
Right.
So that's data that everybody has access to, and I have access to that, and so there's a lot of data around crypto that you just don't get in the traditional equities market,
which makes it really interesting. By the way, what do you use for that data?
What do you mean?
What service?
Oh, I use tools like TradingView.
Oh, that it has on-chain and off-chain data.
Oh no, that's boy, what is the name of the Glassnode?
Okay.
Is one of them. Glassnode, I think it is. I don't know if it's glassnode.com. Anyways, they do a lot of on-chain and off-chain data. On-chain data, actually, because, all different types of things. Like another thing, too, that the crypto has on it that the U.S. markets don't have is high leverage. So people on Bitcoin, if you're not aware of this, there's platforms, not in the United States because it's not something that is legal as a U.S. platform to have, but there's around the world, you can actually leverage a trade. Like I can make a trade and put down $1,000 in the trade and 100x it. So basically, the trade is actually worth 100 times 1,000. So it's a $100,000 trade. So basically, you're trading $100,000. But the challenge with that is that there's also a liquidation price, and the liquidation price is basically everything sold automatically for you if it drops down to a certain level, or if you're shorting it with a leverage. So what happens is, with crypto, if there's a hard sell-off, let's say there's a hard sell-off for 10%, there might be a lot of leverage trades in there that get liquidated, meaning they have to sell too automatically. So a person who's investing would lose like 40% of their money as a big gamble. And so what it does is it creates a domino effect of sells. So that's why we see these huge 20% sell-offs in like an hour sometimes within crypto. Right. I mean, Bitcoin, it's not, I've seen it 100 times where in 3 hours it would crash 20%. Now, the stock market ever did that, it would be crazy because a stock market is considered bearish when it's down 20%, but that takes a year, not 20 minutes with crypto. So if you're in the crypto space, you have to be prepared for that. You have to see that and know that. But if you look at history, it happens 20 times a year. I mean, if you look at Bitcoin, it went up and down 20% in a half a day, 20 or 30 times probably last year.
Yeah.
So you have to be prepared for that. That's where your emotions have to be, the level of your emotions. You have to be confident in the asset and not in the daily emotions, because it can be hard. And I think that's another thing, is that when you are invested, it shouldn't keep you up all night.
So moving on from crypto,
Yes.
Man, you got deep into that one.
Sorry.
With the leverage stuff. Okay.
Sorry, guys, for all of you guys who are newbies.
No, that's really good.
That probably went over.
Again, the idea here is with all that's going on, where do you put your money, and how do you combat inflation? And so, what about like physical assets, specifically real estate?
Well, the good news with real estate during inflation is that any of those assets typically, I mean, you've seen it. You've seen home prices skyrocket in the last 6 months around here. I mean, it's crazy. My home has seen probably about a 45% increase to 50% increase almost in 3 years. Almost, 3.5 years.
Yeah.
Crazy. So the thing is that's another hedge, right? Real estate is hedge. But the challenge is
finding it.
Buying real estate right now is tough because it's at an all-time high. Now, the Fed's just raised interest rates a quarter, I think, a
Mm-hmm.
couple days ago. So that's going to take a little impact. And it's going to impact the market.
And I hear something about
another
maybe
quarter.
Something I read said in 2022 they may raise it up to in total like 1.75%, which is a lot. I don't know if that's accurate.
That's a lot for
It's like
for
5 or 6 rate hikes or something like that.
Yeah, I've heard at least 3.
Essentially, who knows?
3 up to a quarter each. It's 0.75%, but it could be higher. The Feds are doing what they're doing right now is they are just going quarter by quarter right now. They're not promising anything. They're just trying to do their best to deal with this. And so so the home, you're going to buy less home in the future. Prices are going up. Now they might soften a little bit, but yeah, real estate's a great investment, but you don't want to buy real estate when everything is high. You want to buy, you want to buy.
I know you have some rental properties and things like that.
I got a couple. Yeah.
But are you buying now? Are you able to?
I'm holding tight right now.
Yeah.
Right now, and then for the next, until we find out what's going on with our involvement with Russia, until we find out what's going on with China and their stance, I'm just holding. I mean, I'm not doing anything. What I'm prepared for is, do we have enough cash that because that's the challenge. You don't want to become iliquidable. You don't want to have your stuff in assets that are like kind of down, even if they're down 5%. Like, let's say you're buying, you don't know where the bottom is, and you put money into assets and then you're down. You want to be able to get cash. So cash is going to be very important, even though holding it may get beat up a little bit. But during this time, we want to make sure that we can survive.
So as a business, like we're doing something very similar, accumulate cash and also make sure you're making profits.
Yes.
Because a lot of agencies I know don't make profits. We've talked about that before, but I mean, you gotta be shooting for 30% profit, net profit. That's after your salary. That's my opinion. Well, it's not just my opinion. That's like a lot of business people's opinion. That's really hard.
I mean, 30%.
Yeah.
As an agency, if you're a business owner, let's just say, and you're paying after you pay yourself is really difficult.
Yeah.
It depends how much money you take out of your business, but
there's a book, I think it's called Profit First. I could be wrong about that name, but the philosophy is you take profit out first. Like you remove that from your budget and then you work with what you have left.
Yeah.
And the idea is, and everything will take the amount of time or money that you give it. And so if you had to operate on 30% less, you'd figure it out. If the government taxed you 30%, you'd figure it out.
Yes.
The idea is taxing yourself. But I think just profit is really important because we're not 10 years ago, you were in a growth phase, or, even 5 years ago, you're in the middle of a booming growth economy. And so, when brands are or businesses are in growth phases, they typically reinvest, spend all that profit to propel more growth. That may not be happening at the same rate anymore. And so you do need to make sure that you're not just blindly spending that money, even if you call it reinvesting, just blindly doing that.
Yeah. One of the things that I think is really challenging when you see this heightened inflation is you have to clear your mindset to live in a world where prices are always going to be much, much higher. We're never going to, every time we have these big inflation hikes, we never go back to lower prices. You know what I'm saying?
Yeah.
So it's a mindset game. So whether or not you need to charge more, whether or not you need to think differently about
right. It's not like food drops another 30% and it goes back to normal.
What your expenses are going to be now have a whole new norm, and you have to, if you still think your finances and what things cost last year, you're going to be sorry you did, because it's going to be twice as much. And so, and we're never going to go back. So now, a hamburger used to cost, $7. Now it's $15. And, same thing with your electric bill. Your electric bill used to be whatever, $60, and now it's $120. Well, that's the new norm, and that's not going down. It's not going to go back to old prices.
Right.
The only thing that may go back to older prices is some technology that just gets easier to make or cheaper to make, like televisions. We saw that, but So I think that's
That's
key.
a really good point, because that mindset shift is not easy.
It's not easy.
And it's something you have to do intentionally, especially the older you get, because you get set in those ways.
Yeah, and with your business and in people who manage your finances in your business, you guys all have to think the same. You have to understand that, okay, if you're budgeting for next year, you have to think differently about what things are going to cost. You probably are going to have to pad for more inflation. Don't be surprised when food is going to, that hamburger is no longer 15, it's going to be like $30, and you're like, what is going on? And so I think we all need to kind of understand that that's going to happen. And you know what, if it doesn't hit as high as what we think, then we've budgeted. There's nothing wrong with that, then it doesn't cost as much and we're pleasantly surprised. But I think we need to be prepared that right now we're just entering into those higher prices, just entering. We're not, it's a lagging indicator. It's not a leading indicator. So the lag is coming. And not to be a downer on it, but we have to be prepared. And I think as a business, with your business, you need to talk to your employees, and don't be surprised that your employees might start feeling the pinch too. It's where they're asking their salary increases are going to happen, because people just can't afford to live in the salaries we've been in. Yeah. I mean, I don't think salaries have changed much before the last year or two. For 15 years almost.
The hard thing, and it is a hard thing if you're a business, right? Everyone listening to it is in a business, but you've got the salaries, which are expenses are increasing, right? But you also have a challenging labor market too.
Yes.
Right. So unemployment is still high. I want to say like hiring is still high, and then there was some stat on people thinking about leaving or changing their position was something like 50 or 60% of like the workforce was like considering a change. And so so as a business leader and owner, like there's this real challenge of uncertainty in that area. And so you've got to there's a handful of things which we won't get into today, but there's a lot of things you have to do about staying consistent around your workforce. And just hedging against some of those challenges, which are in the marketplace right now.
Exactly. Two things I'd like to say before we wrap it up here is, the first thing is, it's easier to cut. That's where you can find some money, is cutting internally. It's easier to cut sometimes and then get new business quickly. You know what I mean? And then prepare yourself. And then the second thing is diversity. Just diversify, even personally, or even if you do that with your business. It's harder to diversify with your business. But if you're a business owner, if you're just listening to this and you're just an investor and want to keep your money, diversification is key. Because when you go into these spaces, if you go into like what we have right now with deep inflation, if you hold assets that do well during inflation, then it kind of balances it out. So if you have real estate right now, you're probably, as an income, you probably are feeling good that you have it right now during this inflationary time. And there's other things that get really hit hard. So diversification is key. Don't put all your eggs in one basket. That is a risk to certain market changes. Put it into different things. Hold some gold. Assets. Even if you don't hold the gold itself, I mean, I don't hold gold, but I hold gold assets.
Right.
And though it hasn't done great, it's done 2% through all of this. I mean, that's 2% where everything else is getting beat up, including your money. So, it's definitely a hedge. So start, look at that. Look at how you can kind of keep a safe and balanced portfolio.
Yeah, and that portfolio makeup, you can look online. I think there's the all-weather portfolio, and there's a few kind of like standard makeups that that provide those hedges if you're interested.
And by the way, if you do trade, again, I wouldn't take this as financial advice, but if you do use a platform,
are you about to give out an affiliate code right now?
No, I'm not. No, but if you use a platform, there's always pre-set up portfolios like you're talking about that you can just put money in and diversifies.
Yeah, the 4-stock portfolio. I think even Vanguard. If you look, if you have your business and you're like, hey, I've got whatever it is. Let's say you have $100,000 that you want to put somewhere. You can go to Vanguard. They'll give you an advisor, and they'll put you in basically 4 funds.
Yes,
which diversify, and they're not like the hottest places to be, but they're well diversified and they're meant for.
And a lot of them you can dial the risk in, so you can dial in something that's very conservative and a lot less risky. And the key is, I think, is not always making money; it's keeping money. It's hard. That's the hardest thing. Hardest thing is keeping your money almost as much as making money. So
said every celebrity and famous person ever.
Exactly,
because they're famous for losing it all. All right, cool. Well, hey, thanks for walking us through your investment strategy in your mind.
Yeah, no problem, man. Next time we're going to talk to you. You got some nuggets in there too. You didn't even expose. Probably.
I'm holding it back. I don't give my advice. I'm just kidding. No, I really appreciate it, and hopefully this was really helpful for. I know this is something I'm thinking about all the time, and I know every business owner is thinking about the same kind of thing, and so hopefully this is helpful. Again, it's not investment advice. And next time we'll have Bob back here, and we'll get into his TED Talk.
Yes,
and,
that'd be great.
And that'd be interesting. So anyway,
all right,
thanks,
guys.
man.
All right, Ken, till next time.
Till next time.
Bye.
Bye.